All right, what is going on, everybody? Let's break down how I made $15,593 in just one day of trading. Now, first things first, somebody commented, this guy had no idea what he's doing. Anyway, and then I did a live login. I'm like, yeah, whatever. Boom, right? Hey, haters gonna hate. It is what it is. You see what I'm saying? Anyway, so let's break it down why and how I entered on. And by the way, these trades that I took for 15K gains, this is only SPX, nothing else. It was just SPX. And what's SPX? SPX is just literally, if you search SPX on your trading view, search SPX, the first one right here. This is SPX. And SPX is pretty much, think of it like 10x SPY. It pays really, really well. It pays really, really good. Like, I mean, your contracts can go from like $7 all the way to $11 by a little move. For example, I took this rejection. I'll talk about in a minute. I think the contracts went from like 4.4 all the way to like 6 in a matter of like 5 minutes. Now, if you think about it, 4.4 to 6, we're looking at like a roughly, if I'm not wrong, that could have been like 30 to 40%, 35%. That's insane, right? 35% in 5 minutes. That means if you had $1,000 position size, you're making about $350. Now your entries and exits not always going to be exactly 35, but still, $20 off $1,000. Let's say if you had a $4,000 position size, now you're up like $1,200, which is pretty fucking insane, right? So let's break it down: how I entered, why I exited, where did I exit, where did I enter, and everything in detail. Shall we? So first things first. This concept that I'm about to break down with you is called the box rejection method. Okay. Now, please take some notes. And also, I'm a little bit rushing it because I have a meeting starting in like 8 minutes, so I'm gonna smash this one. All right. So, because we had some news coming out today. Okay, we had some news coming out this morning, pre-market, and the news was 10 o'clock. 10 o'clock, there was job numbers coming out. Look at this. These job openings, they're so freaking huge, yo. Like, it's absolutely nuts if you pay attention to this right now. Like, this is where the market opens, 9:30. This is 9:30 right here. Okay, now we knew straight away that the pre-market, even I make a video every single day for my YouTube, for my Instagram, where I break down in the pre-market what can happen. I said first 30 minutes going to be choppy because of the news. Anyway, this is the first 30 minutes. Candles are going up and down like a seesaw. What that tells me is, buyers or sellers, they both are in control. They're moving around the price. Think of it like a tennis. They're playing tennis. Prices go there, they send it back. Prices go there, they send it back. They're playing tennis. We don't want that shit. You see what I'm saying? Anyway, now this is 10 o'clock candle right now. This is 10 o'clock, and usually when you will see, sometimes what the market does is, if 10 o'clock there's some news, the news will come out, and then they're still fighting in the back end. So we still do not know who's winning. And we usually find out within like 5-ish minutes. And look at this. Big dump, big move up. And this is it. Now we know that the market has kind of calmed down itself after the news. We gave it like 5-10 minutes already. This is the time where we start looking at waiting for the reset to happen. Now, how does a chart reset? Chart can only reset after a choppy day, like choppy morning, very choppy morning. We need to wait for the charts to reset themselves. So the charts can reset themselves when they make a new high of the day or new low of the day. Now, if it makes a new high, pulls back, gives us an entry, there can be entry for the upside, or this can be entry for the downside. You see what I'm saying? So we're waiting for the charts to reset themselves. And let's mark our highs for now. This is the highs that we have for now. This is the lows that we have for now. We need to wait for the prices to get either above it or below it. Okay, let's see what happens. Now, this is a box. This is a box reject method. Prices made a new highs. Ooh la la, that's nice, right? Now, you got to think of it like people who went long here, right at the bottom. And prices are making new highs. Unless or until it comes back, retest this level, we can take a play towards the upside, especially 59.50 is a huge level. But it pretty much did what it did. It kind of retested. This would have been a beautiful freaking trade. But anyway, it kept going up, and now I'm sitting here, I'm thinking, I'm like, okay, a break and a retest of the box has happened. This would have been a beautiful entry, whatever. Now the prices are coming in the rejection zone, and this is called, I call it kill method. All right, that means I kill the freaking charts right away. What that means is essentially, every every $50 move on SPX is a dynamite level, like it's a big level. But only on SPX, +2 or -2 is super important. That means 50, this becomes a zone. Instead of this just by itself, it becomes a zone. 59, 50, 59, 52 down to 59.48. This becomes a little zone. And if you try to pay attention to other charts as well, look at this. A bounce happened at 59.02 within this zone. What happened? Price came down. It didn't actually touch 5900. It broke above, retested this little kill zone, and made a big move, right? And first time, especially after a choppy time when the market goes and touches these huge critical levels, prices can get rejected very nicely. For example, like this is chop right here. What happened? Prices came down in the kill zone. Prices made a big move towards the upside, and that's how you kind of trade the kill zones. Okay, so now we know we're looking for a kill zone. We're looking for an entry towards the downside, especially it came here. I was like, you know what? I can put a stop loss right about 59.50. Let me go short on this. And my stop loss is going to be just literally intraday levels, this box. I'm like, roughly around this box, I'll jump out. Anyway, this became the trade, and it made a big move down. And roughly around this box, I jumped out. And it was an absolutely beautiful trade. And this trade paid like 35%. Now, you understood what I did here. I knew for a fact prices are going to reject. Why? Because especially after a choppy day, you're going to understand buyers do not have the conviction that the prices are going to break above this. So they're like, oh, I don't know, man. Let's see. Most of the people are waiting. Let's see if the prices can close above. When the buyers don't have the conviction, sellers are looking for a chance to actually take over. So what they did, they kind of took over for a little bit. It came down. And this is one thing that I always tell people. When you're trading SPX, you can't have greed. You can't be like, oh, maybe if it breaks below this level, it can make a nice move. No, you can't have greed. You got to take profits. You enter, you exit, done. Because it pays well. It's not like it's only going to pay you 10% and you have a $1,000 position size. You only have $100. It's not that. It's going to pay you well. So this is one trade. Okay. Now I'm like, cool, whatever. Let's see what the market does. When it started moving towards the upside, I wanted to see 59.50, what happens. There's multiple other strategies. Break above this kill zone, come back, retest this kill zone. These can be entries as well. Now, look at this. Absolutely freaking beautiful, right? Bro, I'm giving you too much sauce. I don't think you guys realize when I'm actually talking, I'm breaking down a video. I don't personally think you realize how much sauce I give you. Now, I don't care you realize it or not. I know my intentions are good. I know that I really genuinely want you guys to go fucking print some money. And once you print some money, bro, and let's say you start making $300 a day, and you're like, oh my God, man, I want to take you to $1,000 a day. Guess what? What do? Because I already helped you make $300 a day. You go, hey, Somesh, can you actually teach me? I'm like, yeah, man, you can join my mentorship program. I can help you. And then you join that. I give you stuff that you actually need. You start making $1,000 a day. 1,000 a day for 200 trading days. That's 200. That's 200K. Anyway, you get the point. Anyway, you get the point, all right? So now what happened? I took another trade on this. I waited for the prices to get above. I was like, nice. It got above. This is cool. Let's see what happens. I even called it out in my chat as well. These trades in my chat, by the way. Yeah, I can't show you my chat because that's proprietary information. I talk a little bit too much. I can't break it down. I can't really show you the chat. But anyway, this is a trade. It made a big move towards the upside, and I'm waiting for a pullback. Any time when a big move has happened, bro, you can't just jump in the middle of nowhere, because you're gonna jump in here, price is gonna pull back, and then you jump in calls here, you're going to jump out of calls here, then the prices go back, then you're going to jump in again, then you're going to jump out again. You're always going to be at the wrong time if you do not have a system. So what happened here is prices started being a little bit of, I just want the prices to slow down. For example, you know, when you drive a manual car, you're going super fast, and then you have to change the gear. So you let go of the speed, you press the clutch, and then you change the gear. Then, fraction of a second, the car slows down a little bit. Like slows down and then picks up again. You understand what I'm saying? Or you don't? I don't think you do. You know why I know? You might be driving a fucking Tesla. Or you know what? You know why? You might have never driven a manual car. But people who have driven a manual car, let me know in the comments. You know what I'm talking about. So what happened here is a manual clutch system is happening. Prices slow down for a little bit. This is what we want. Prices to slow down. Let's let it change the gear. And it slowed down, formed a beautiful flag pattern right here. Especially this is called flag level strategy. A beautiful flag has happened above a critical level after your kill box, and now a beautiful flag has happened. I'm gonna jump into the break of this flag. I don't like to make things extra complicated for myself. This is literally the trade. Look at this, bro. Look, just think about it, man. It made a big move towards the upside. I jumped in here, I added more at this break, I added more, I jumped in 10, I jumped out of 10, I added 15, I jumped out of 5, I added 10, I jumped out of 5. This is called just every single time the price is, you literally add more when the trade is going against you, I add when the trade is going with me. I just want to bet more money on it. I'm betting on the winner at this stage. This is what I love about the stock market. You can bet on the winner. Think about it. Think about it. You don't have to choose who's winning. You realize, okay, buyers are winning, let me bet on them. Buyers are winning, let me bet on them. And I kept adding and adding and adding and adding. This was actually a nice move. This turned out, I think the contracts went from, if I'm not wrong, $5 or $6 to like $13-14 or something. I think a little more, but anyway, you get the point. Absolutely beautiful trade, really beautiful trade. And these were the actual entries and exits, and I kept exiting and entering. Now there's not going to be one spot where you're like, oh, I'm out of the full position. There's never going to be one position where you're like, oh, I'm out of my whole thing. Like, you keep thinking that I'm going to wait for the best perfect timing to jump out of the whole thing. You're never going to find one exact thing. You see what I'm saying? Which is why you enter, you keep getting out a little bit as the prices are moving up as well. You can keep adding, of course, but you should keep taking profits always. You should, if you're jumping in 59.60 calls, next time you enter, do 59.70. Next time you enter 59.80. So you keep taking, so if you do 10 contracts of this, do 8 contracts of this, do 6. So just in case the prices turn around, you still have the gains of all this to protect you. And that's about it. And now look at these wicks, and so many wicks are happening and stuff. Now prices can go into a FOMO phase where they can actually reject big. This looks like a FOMO phase. Why? Because absolutely no volume. Prices happened after the big selling machine, like big selling happened. And then if you know how to trade this stuff, you can actually catch the downside as well. But this is called the reversal stuff, and I have heaps of trainings on reversals. If any of my students are watching this, I have heaps of trainings on reversal. Go watch the modules. This is absolutely fire. There's I think module 15 breaks it down in super detail. But yeah, guys, this is it. If you enjoy this video, don't forget to subscribe to the channel, and let me know in the comments that you watched all the way till the end. And if you wanna learn from me more how to actually do this on your own, how to make $1,000 a day, 1,000 to 2,000 a day for the rest of your life, there will be a link somewhere here. Click on the link, submit your application. Might take you 2 minutes. It might be the best 2 minutes of your life. All right, I'm out of here. Peace. Goodbye.